It's been a historic few weeks in precious metals. Couple charts here we think capture just how remarkable recent moves have been. This one from ABC Campbell on X shows single-day returns in silver since 1750. That bar at the end, January 30, largest one-day sell-off in history, 38%. Volume's been off the chart. 41 billion in traded value in SLV on January 30, record by far. What about gold? We see gold finishing up a third wave. Here's a picture we've been showing subscribers. The high so far about 6K, January 29. Ahead of that high, market veins bullish consensus, 97% gold bulls, not just for one day, but for 4 straight days before the top. Spot prices lost 900 an ounce in a matter of hours, January 30. This is how we use wave structure and sentiment to forecast markets. It's our bread and butter. If you want our current metals forecast, go to elliottwave.com. The dollar era is ending. That's the view of the former CTO of Coinbase. The apocalypse is now, he says, just accept it. Forbes seems to agree. This is their image of the greenback going up in flames. When major publications include apocalyptic language, end of the world imagery, it's a pretty good bet that whatever the asset, it's close to a reversal. We think that's the situation today in the dollar. Here's DXY since 2022. It's a messy wave structure, but we have nearly hit the lower boundary of a 3-year trend channel. Best wave count says we're in the final leg of a double zigzag. Lots of signs here pointing to a significant dollar low, and a rally in the buck has major implications for every other asset class. If you want objective forecasts based on wave patterns and investor psychology, go to elliottwave.com. The corporate insider sell to buy ratio from Washington Service, 4.83 in January. For every insider buying their own company's stock, nearly 5 of them are selling. Notice the last time the ratio was this high, February 2021. That's when the most speculative shares started to decline, meme stocks, NFTs. Here's a good example, the Goldman Sachs non-profitable tech index. These are the tech companies that make no money. The peak was February 2021. We're still about 49% below it despite a bounce. We've said it before, when the insiders are selling stock in their own companies, there's probably a good reason why. And today they're dumping shares at the highest rate in 5 years. For more insights, go to elliottwave.com. Bond spreads are the tightest in nearly 3 decades. Here we've got investment grade corporate spreads since the late 90s. This is a good gauge of fear and complacency. The 2 biggest spikes here were 1 during the pandemic and 2 during the financial crisis. That red arrow, tightest level in 28 years. So bond investors more confident than they were in the dot-com era, more confident than they were ahead of the financial crisis. At the same time, delinquencies are rising, bankruptcies are climbing, and we just watched global debt issuance hit 38.5 trillion. That's a 130-fold increase since the 1960s. Bonds are priced for economic perfection. We think economic performance is about to disappoint in a big way. If you want specifics, go to elliottwave.com.